All right, guys, we'll start soon. Just give me a second. I will just set up my stuff and I'll join you in a jiffy. Yeah. All right, guys. Hi. This is Ming Hon, and I'm your host for Traders Talk. And this is another exciting Tuesday. And I just reached my station and just right in time to start the show. Yeah, great. So for those who have just joined, welcome. And today we are actually going to talk about options pricing. Yeah, options pricing, and just going back to a little basic. And of course, in this show, we talk about various things. Of course, the first thing, which is the market updates. Yeah, market updates. We'll talk a bit about the market, what's happening, and what are we expecting the coming trading week. And of course, the other more important thing is to share with you guys more technical knowledge about trading, and also the stock markets options and all these kind of things, so that you guys can improve your trading skills and also increase probability of your trades. Yeah, so great. Yeah, so give us a thumbs up if you like what you hear so far, because we are going to continue to actually give you great contents, whether it's actually through this show or even through new channels. Yeah, because maybe we're actually starting some new channels to actually give you much more pointers and to actually get more engagement, not only on a weekly basis, perhaps on a more regular basis, but shorter period, just to actually give you key important tips about trading the stock market. Yeah, and of course, these 2 months has actually been a very good a very good 2 months. Yeah, very good 2 months. Because the market has actually been going up. Yeah, and we if you are following us for the past many shows, week on week, I think now probably for the eight week, if not mistaken, since 16th of June, right? The market has actually gone back up, almost recovering at least close to 50% of its all-time high, right? And basically all the sufferings, you are basically halfway there, almost halfway there, back to the all-time high. Yeah, and of course, for those people who took opportunity during the last 2 months, or last half a year perhaps, to actually go into taking positions, taking long positions in fundamentally strong stocks, right? Of course, you will see your portfolio to actually be in green, at least in green, if you actually entered the market early, the first half of this year. Yeah, because if you have actually staggered your investments, your buy-in points, right, probably you some of those positions which you have entered would have actually already made profits. Yeah, but maybe on average, you will probably come to a small profit or even a break even for the entire portfolio. Of course, for those people who carry on positions from last year, and if you have actually not done anything with it, then of course your portfolio will probably be down between 10 to 20%, I would say, if you are in the US market, and of course if you are also in the China market, or the Chinese in China market, or the, invested in China stocks, then your portfolio would actually be hurting much more, because for those stocks, right, they have actually gone down by more than 50%, by more than 50%, and it's actually continuing stay low, stay in the lows, stay in the lows, and it's actually not coming back as compared to the US market, where the fundamental stocks have already recovered at least 40 or 50%, some of them, from its all-time high. And of course, if you are invested in the meme stocks or those stocks which are hype, then Facebook user, good evening. So if you can put in a name or face to it, that will be better. So for those who have actually been involved or went into hype stocks, especially in the tech sector, then of course in that area you would actually suffer more because for those stocks, a lot of it have actually gone down by 90%, or 80 to 90%, and even if it actually recovers some of it from its lows, it has actually recovered by almost 80 or even 100%, but that is actually from its lows. You see, that's actually from its lows. So because if you have actually bought in on at its high, then that 100% from its lows is not even enough to actually cover 10 or 15% of the losses which you actually need to recover. So that's the so-called position or the market for the first half of the year, and we are actually going into we are actually in the third quarter right now, and of course, when we pass on to the third quarter, the market has been quite kind to us, and of course, to date, it has actually gone up by also quite a lot. Let's just look at the chart before we actually go into the tradings. And if you have any comments, please put on the chat box so that I can actually look at them and answer the questions. Let's stop this, and I put on the market. Just a short brief to look at the market. Where is the chart? Okay. Is this the chart? This is the chart here. Yep. Okay, let's put this chart. Okay, all right. Let's make me smaller. Okay, let's make me small. Okay, this is the US yen. Okay, let's do this stock. Let's change this. Okay. Change this. When we actually talk about the market, generally we look only at the two index. The first one is actually the S&P, the S&P 500, right? The S&P 500 index, right? Okay. So yesterday, basically, it closed 17 points up, and it is now at close to 4,300 points. 4,300 points. And of course, like I said, since 16th of June, we have so-called reached the lowest pits so far this year at this level. And since then, we have actually rallied all the way up by how much? You guys are seeing what I see, right? Okay, let's just put it here. Okay, because I don't have. Okay, all right. So we have actually rallied up all the way from here, 16th of June, all the way up. We are actually up. No, not this. We're actually up about this indicator. Yep. We are actually up about 18% from the lows. We are up 18% from the lows for S&P 500. And basically, before this, we had actually a drop of about 27% from not even 27. Actually, is this April even more? It's actually going back all the way here, which was 4th of January, right? The highs, right? We are actually 32% down from the highs to the lows here, and we have actually recovered back from the lows 18%, and now for the year, we are actually down about 12%. Not too bad, not too bad. Down by 12% for the year. And of course, this is the S&P 500, right? Yeah. So we are more than half. We have actually recovered more than half for the SPX. And the Nasdaq, the other one which we actually look at, have also similar kind of patterns where we have actually recovered. We've actually gone down all the way 34%, and now we are actually down about 18%. Yeah, we are down by 18%. And from the lows, we have actually recovered about 23%. Yeah, not too bad. Yeah, so that's why I said for those people who have actually bought in or picked out fundamental strong stocks during this time down, right? Because we would not know when was the bottom. I mean, previously we were thinking 13,000 is the bottom. Then we were thinking about here about this level, 11,007 was the bottom. Yeah, and then the bottom out at about 10,000 here, about 10,000, about 11,000 here. Yeah, so we do not know which was going to be the bottom, but of course, for fundamental stocks, right, we can actually buy in at different levels. If the intrinsic value, the valuation is actually okay, then we would be able to actually get in at various levels, here, or here. And of course, right now, we are actually above these kind of levels where you might have actually bought in, whether through the index or even through individual stocks. Yeah, so this is the position right now. And of course, where are we headed is always the question where people actually ask, right? Okay, so overall, we are actually on a short-term uptrend. Yeah, we are actually still on a short-term uptrend, but the trend seems to be actually starting to reverse up. Yeah, starting to reverse up. Of course, the first indicator which we actually saw was the 20 moving average crossing the 50 moving average. And of course, right now, the 20 moving average is trying to actually cross the 100 moving average. And of course, the next one, the current price is actually going to touch the 200 moving average. So these are actually small indicators of so-called, I won't say it is actually a bull. I won't say it's actually a bull. It is actually a stop, somewhat stopping the so-called downward momentum of the bears, downward momentum of the bear. Yep. So these are the positive indicators. Yep. And what else? What else are we looking at? Yeah, of course. Even if you look at the other things which are starting to slope up, yeah, the 50 moving average is also starting to slope up. This one, the next, once this crosses, then this 100 moving average will also start to slope up. And of course, the biggest and the so-called strongest level here, if we can actually breach the price above the 200 moving average, I think the market will actually take this very positively and will actually put in a lot of so-called pump in a lot of liquidity back into the market. Yeah, because everybody likes the bull market, right? I mean, not everybody are actually like to short the market. Yeah, because overall, I mean, over the past 100 years, right, the market basically only goes up. Yeah, I mean, short term wise, you can actually see that we are actually going down. But of course, if you move the what is that? If you move the scale smaller, right? If you move the scale smaller, like this is actually on a monthly basis, right? You can actually see that for the past many many years, the current levels where we sit is always higher than the previous years. Yeah. So although there's a dip here, but of course during this time when there's a dip here, we went higher. Of course now there's another dip here. I would not say that in the next 3 or 4 or 5 years we won't go higher, yeah, because things continue to actually improve, economy continue to actually improve, and people would actually want a better living, and all this will continue to actually grow, yeah. And of course, if you're talking about having a war, a nuclear strike, and or anything that serious, there isn't anything to live for. Then, of course, even the market can actually go down to zero. I mean, if everybody dies, right? Yeah. So that is actually the extreme. So don't go to become a pessimist. We actually just live by what how to say, we just continue to actually live on to actually enjoy our life, right? And we want the market to go up continuously, over the period of our life, so that is basically the current market condition, but of course, I think for the many I think for the past past 2 weeks, I would say past 2 weeks, if you have followed our show, what we said that is that the current levels might be a bit elevated, overbought for the markets, right? If you can actually look at this stochastic, right? This is actually one indicator where we look at the position, whether there is actually prices are actually overbought or oversold. If it is above 80, basically we are talking about overbought positions, that there might be some retracement coming. But in the past weeks, we only see very short-lived and very shallow retracements. Yeah, and of course, this week is not going to be an all green week. I would say, because again, some so-called major market data is actually coming out this week. First one is, I think, if not mistaken, the retail data, which is actually coming out on Wednesday. And the next one is actually the FOMC minutes is actually coming out on Thursday, if not mistaken. Yeah. So as usual, market might be a bit sensitive when such key data is actually coming out, and because of that, the fund managers or investors might take some profits off the table to actually put on risk on, and actually that might cause the buy-in momentum to actually slow down and prices to retrace. Yeah. Although yesterday market, when it opened, I thought it is actually a slightly red, but of course throughout the day it actually went up very strongly. That to me indicates that the market is a bit desperate, because you see we also breached a lot of key so-called resistance levels, right? We breached this last week. And of course, there was actually another level here at about 4,003, which we were few points off to actually breaching it. Maybe we have actually just touched it yesterday. No, yeah, we actually touched the 4,300 points yesterday itself, but we actually closed slightly 4 points below that. 3 points. We actually closed 3 points below. Yeah, we went up to all the way to about 4,301, and the closing was 4,297. Yep. So this might be also an indication of risk on, which has actually started end of the day. I think end of the day we actually reached the highs. Let's just check. I think while I was sleeping, about close to 3:30, my what is that? My alarm, not alarm, my indicator rang about 3:30 a.m. Because I actually place certain levels where once it reaches, right, the chart will actually tell you that you have reached that level, and the thing will just ring. So at 3:30 a.m., that level have reached, which means that we have actually reached the so-called top of the expected level during that day. Let's just put it maybe 3 minutes chart. Yeah, 3 minutes chart. Where were we? Yeah. Oops. Yeah, you see, this is the short-term 3 minutes chart, right? You can actually see during the day we went. I think here we went up, then we went down, right? We went down. So I thought the market will actually go down already starting on Monday, but unfortunately it did not. It did not. Yeah, because I have started to also put in some bearish position last Friday, Friday close to actually take on possible retracement that can actually happen the first half of the week. Yeah, so that was it here, and it came down, and subsequent once we were down here, right, we went all the way up to the highest level here which was about 3:30 a.m. You see, yeah, 3:30 a.m. where I actually placed the indicator here. Yeah, 3:30 a.m. and we actually closed off slightly lower. Yeah. And of course, today the futures was also red, if not mistaken. Yeah, the futures open red, and it continued to be slightly red. Both S&P futures and also the Nasdaq futures. Yeah. So this is the market. So be prepared for some. Oops. Okay, be prepared for some form of retracement till, I would say, till Wednesday morning. I think Wednesday morning is the retail data, right? So I would say maybe today, there would be some form of retracement, and of course, depending on what kind of data comes out on the retail side, we would see where the market continue to go after that. Yeah, it can actually go both ways. But of course, in the past months, the retail sector was not that good, right? Overstock positions and all these kind of things. Yeah, but of course, I would say, yeah, maybe because of the high inflation and all, people might not be purchasing that much. Yeah, so I am not so bullish about the retail data coming out on Wednesday. And of course, if it is not good, then of course the market can continue to go down on what is that, on this Wednesday and Thursday. Yeah, I don't know, FOMC statistics. Yeah, so of course, when we trade, of course, these are just how to say, market news and all, and basically when we trade options, right, we would actually also look at the price action of the stocks or the index to actually determine what kind of strategies which we use. Yeah, and of course, today itself, hi Can, long time no see. Okay, all right. So for today itself, we're just going to go back to some basics, because a lot of times, I noticed that a lot of people actually just trade options without knowing, right? Without knowing what actually how to say, what actually affects options pricing. How is actually the option pricing determined, and based on what factor. Yeah, what factor and what things inside the option pricing. I'm not going to go very technical. I'm just going to give you a basic idea, and basically from there itself, maybe I would bring you on to the trading platform to show you where to actually gather some of this data, which is actually important for you to determine what kind of strategies you trade, and what type of stocks you select in order to use a certain types of trading strategy. And we are talking about option strategy here, yeah, not just buying outright on the stocks. Okay, let me put on some slides here. Okay. All right. Okay. So options pricing, right? Okay. If you look at options pricing, let me go here. Okay. Okay. You guys can see, right? Okay. Okay. So if you look at options pricing, right? I mean, basically the thing which we look at is options pricing, or we can also call it a premium. If you are actually buying options, what is the price you actually pay for the options? Yeah. And if you're actually selling options, what is the price which you actually get to sell that options? And of course, if you look at the options premium or options price, right, it actually comprises of two things. One is of course the intrinsic value, and then what is the other one is actually the extrinsic value. Okay, so without going into very technical, I will just explain briefly. The part on the intrinsic value is actually the simpler part. Yeah. What this is basically the how to say, the value arising from in the money options. Yeah. So if you're actually trading options, there is this thing what we call in the money or out of money. Yeah. So in the money, if you are a buyer of options, that means basically you are actually holding options with a strike price, which is actually with a strike price which is actually lower than the market price. Means that you can actually sell sell an option. Yeah. Where's this? Yeah, so you can actually buy an option. So you can actually buy an option when the stock price is actually trading higher. So basically, if you are actually holding an option of $120 and the stock price is actually at 140, what this means is the difference here is actually what we call an intrinsic value. So you can actually buy the option, exercise the option at 120, and basically you can sell in the market at 140. Yeah, so that forms the part on the intrinsic value of your options. Yeah. And of course, the other side of it is actually what we call the extrinsic value, and this is the part where a lot of people don't understand so much, because it is a bit more technical as compared to the intrinsic value. Yeah, because the extrinsic value is actually comprising two things. One is of course what we call time value, and if you guys know options, right, you see all these what is that, the expiry dates in the options. And these expiry dates are actually what we call time value. Yeah, we have 1 week options, we have 1 month options expiring 1 year, or even 2 or 3 years. Yeah, so that is basically the time value. And the higher time value you have, the bigger the extrinsic value you have. Yeah, because how to say, people are actually willing to pay more for an option which has a longer period before it expires. Yeah, so it's just like, how to say, expiry. What kind of examples should I use? People are willing to pay more for something which can last longer. For example, if you have a so-called, if you have say, I don't want to use wine because maybe wine, yeah. Yeah, I mean, if a wine can actually last 100 years, right, then they would probably be more expensive than a wine that has an expiry of maybe 1 year, for example. Yeah, so that is a very bad example, but it is what we call time value. Yeah. Of course, the other thing is implied volatility. Okay, this is even a more important thing, which is what we call implied volatility, and this actually represents the so-called volatility of the stock price, right? The volatility of this expected volatility of the stock price in a year's time. Yeah, so that is what we call implied volatility. And as a trader of options, right, we often use this IV metric to actually determine what strategy we use, what kind of stocks we actually use to trade the options. Yeah, because for example, I don't have okay, let me draw this out perhaps. Put it here. Okay, escape. Let me just put in insert new slide blank. Okay, let me draw it out. draw. Okay. Okay, so what is implied volatility, right? So it's actually an expected volatility of a stock. Say for example, you have the Apple stock right now, right? Okay, Apple stock right now, which is actually trading at about 180, no, $170. Say, yeah, $170 Apple stock right now. So if we say what is the implied volatility of Apple, basically the expected volatility of Apple stock for 1 year, yeah, a period of 1 year, and we actually see this IV number in a lot of the trading platform. It is actually there, yeah, it's actually there given, and why is it actually given? Because it is actually how to say, derived based on what the people are willing to pay for the options. It is actually derived from the price of the options. Yeah. So this IV is not resultant. Does not result in the price of options, but the option price. How to say, the option, the IV is okay. You have the price first. You have the option price first, and that option price is actually so-called how much people are willing to pay for this option will derive this so-called IV. Yeah. And for example, Apple, say the IV for Apple is, say, make it simple, 10%. Yeah. If the implied volatility is 10%, what it means is that Apple price is actually expected to move plus minus 10% during the 1 year period. Means that it will actually go down here by $17 or go up by $17. Yeah. So this is what this IV will actually show. Okay. So when you are actually trading, it is very important for you to actually know IV. And of course, the higher IV, the option pricing would generally also be higher. Okay, the higher IV, remember, IV high, then the option price would also tend to be high. Yeah. Okay, remember this estimating value, yeah, is depending on time value and implied volatility. If you make this IV bigger, of course the box in extrinsic value will actually become bigger. So that just remember that. Yeah. Okay, so the higher IV, the higher the IV number, we should actually see that means that the option price is actually going to be higher. So what does that mean to options traders? Okay, that would actually how to say, give you a perspective of how much you're actually willing to pay for an option as a buyer, and as a seller, how much you are actually willing to take on the risk to actually sell the what is that? Sell the options at that certain strike price of it. Yeah. Okay. And we can actually also see, for example, let's just do it here. Another one here. Okay, maybe I put it bigger. Okay. Okay. So if you're actually talking about two options, Apple. Say Apple is trading at 180. Okay. And just now we were actually talking about having an IV of say 70%, right? 70%. Yeah. So if you say you buy an option at 180, right, strike price, and the IV is actually 17, you might actually need to actually pay a premium of, say, $2. I mean, let's just don't talk about the expiry date first. Yeah. So Apple, $2, 180 strike, 17 IV. And let's say you have another stock. We actually want to find a stock which is around 180, for example. Okay, let's just put, for example, Target. Yeah. Okay, target is currently trading at 173, right? So let's say you buy a stock which is option strike which at 180, and you need to actually pay $4 for this. Yeah, you need to actually pay $4 for this. So for the same so strike price, different companies, you need to actually pay $4 to buy this option. Yeah, to buy this option, and of course, what the difference here is that can only be IV, and this IV, if I just put it mathematically, no other variables, it can only be two times the value of Apple's IV to, because this is actually two times the price. Yeah, so this is actually putting it very simple. This is actually putting it very simple, how this actually works out. So if you are a buyer of options, yeah, if you are a buyer of options, yeah, which one would you actually want to pay in order to actually go into a trade? Would you actually want to pay, assuming both are on an uptrend bullish, both are actually on an uptrend bullish, if you are a buyer of options, which one would you actually prefer to actually buy? Yeah, and of course, if you are a buyer of an option, you would actually tend to choose, say, Apple, yeah, because it is actually cheaper, man. Correct, yeah, it's actually cheaper. So that can actually be one thing which you actually how to say determine what type of strategy you use, and of course, when we are actually buying options, we actually want to um, choose what is that stock with lower IV if you are actually on the buying side. Yeah, and of course, if you're a seller, then of course you actually want to uh, sell a stock with a high IV, because you're actually getting paid more premium. Yeah, more premium. Of course, the thing is, if you talk about the volatility, then of course this is more volatile. Is more volatile than this. Yeah, because it actually moves 34% within a year, whereas this actually moves about 17%. Yeah, and of course, these are some gauges which we actually use to see what type of stocks which we choose. And of course, even during the year, Apple might have different kind of volatility during the year, IV during the year. Yeah. And of course, if you actually follow the stocks, right, generally you will actually know how to say whether the IV of the stock is actually high or low at that point in time. Yeah, of course, if you look at the general market right now, IV of a lot of stocks has actually came down because the overall market actually went up. VIX, which is also the volatility index for the overall S&P, right? Has also came down, and of course the IV of most of the stocks would also come down. Yeah, and of course, when there is actually a spike, then of course, as a premium seller, then that's the time where you actually take opportunity to go into a selling mode for that particular stock, because you can actually see that the premium become richer. Yeah. So this is in a short way how we actually what IV is, and basically how we actually look at IV for stocks, and also compare different IVs between different stocks, and within the same stock, different time what the IV is. Of course, it can also be very deep going into IV, because from IV you can actually move into the IV percentile. Okay, IV percentile, and of course, once you finish the IV percentile, then you can actually also go to IV rank, which are basically also indicators, different type of indicators, which we actually work on based on the IV, yeah, IV. And of course, briefly, the IV percentile is basically just a percent figure of the current IV, where it actually sits for the past year. Yeah, for example, if current Apple IV is 17, and you're talking about the IV percentile is at 5%, means that this Apple IV sits most of the time. How to say? 5% of the time is actually below 17. 5% of the time for the year is actually below 17. And of course, as a result of that, we can actually see that the current IV is actually low, yeah, because 95% of the time it is actually above 17. Yeah. And of course, IV rank is another measurement where they take the lowest point of the IV during the year and the highest point, yeah, and actually form a rank or a rank of a rank, lowest and the highest, where the current IV is actually sitting between the lowest and the highest point. Yeah, and of course, let's say the highest IV is, say, let's just say 50, and then let's just say this is 10. Yeah, and let's say the current IV is at here is 30. Yeah, 30. Yeah, the current IV, which is 30, then of course we're talking about the IV rank sitting at 50%. Yeah, 50%. So there's another indicator where we also use to see where the so-called IV or the richness of the premium of the option is. Yeah, and of course, if you use IVR as an indicator, then you actually want the IV rank to go higher. Yeah, go higher, because the higher this IV rank is, means that it is actually on a higher ranking towards the top of the IV for that year. Yeah. So I hope I'm not confusing you guys too much with all these kind of terms, but really these kind of terms are actually very important to actually understand and know when you are actually trading. And all these measurements are also given and shown in the trading platform. And I will just show you where to actually find this before we close off the show. Okay, so far the best platform which actually shows all these indicators I know is actually Tastyworks. Yeah, so Tastyworks is one platform which is basically really geared towards using IV as a metrics to actually trade. Yeah, and of course if you actually follow Tastyworks or Tasty Trade, which is their education arm, right? Which plays every day. I think from 7 p.m. all the way until market closes, right? Yep. So they have an education or a show which you can also watch. Yeah. So this is their trading platform, and of course within the trading platform, right? If you actually look for Apple, right? Okay. So all these indicators are actually shown here. Yeah. Where is it? The IV rank is here. IV rank 5.7. Yeah, 5.7. And then where is the IVR? Yeah, IVR here 25%. Yeah. So Apple is actually trading right now at a low IV. Yeah, probably because it actually went up so much already, right? So basically it cannot be still trading at a 50% IV. And of course, if it trades at 50% IV, means that Apple can actually go up another $80 plus and minus, which probably won't be possible, right? So right now, what this IV says is that Apple can actually go up and down another 25%, and so far Apple is actually down about 6% from its actually all-time high. Yep. So it can either go up 25% or go down 25% for the remaining 1 year. So this is where the IV is. Yeah. So of course, if you're actually trading Apple, if you're selling premium, probably this might not be the best candidate. If you are actually buying options, whether it is actually on the call side or the put side, this may be a more suitable trade, mainly because of the IV low IV here. And of course, if you look at IV rank, it's actually only 5.7, means that 95% of about 95% of the time, Apple actually trades above 25 IV, which means that this 25 IV is already reaching its so-called historical low right now. So Apple premium pretty cheap if you are into directional trade, whether it's up or down, this may be a good candidate. Yeah. Where else? This is IV, and of course, the other place where you can actually look at the IV is the expiry IV here, which is on each of the what is that? Each of the expiry dates, right? You can actually look at the IV here, and of course, this measurement here is also one where we actually use it as a tool where we actually determine which expiry period to actually choose to trade our strategies. Yep. And also especially if you are doing so-called earnings trade, right? That means you are trading earnings, then of course you would actually want to look for the expiry with very high IV, and of course if this IV is not high, right? And of course, if you look at the so-called pre and post earnings, let's put which stocks has earnings. JD maybe have earnings coming. Okay, so if you look at earnings, right? Earnings here. Earnings is actually on 23rd of August, right? So it's actually basically between is in this expiry. This expiry here is actually sitting on the 26th August expiry. So if you look at that week itself, you can actually look at having the highest IV within here. Yeah. So that means basically this so-called premium which you're actually getting here is high. And of course, why high premium? Because of the uncertainty of the binary event, they're actually giving causing the option price to be expensive or high. Yeah. And of course, if you are trading this, then of course you actually look at the post so-called earnings week expiry, which is having a lower IV, which means what we call IV contraction. Yeah, that means from with a week expiry with a high IV, which means it's expensive on the week of 27, and post 2nd of September, we expect the IV of it to actually contract. Contract means to come down. And if you are a premium seller, we love IV contraction, because when we sell at high IV, we get paid more. Okay, and of course, post announcement, when the IV actually drops, then even if the stock price does not move, the stock price does not move, the IV contraction will cause the premium to be cheaper. That means you can actually buy back the options at a lower price, even though the stock price does not move. Yeah. So again, that is another metrics. Once you actually understand IV, how you can actually use it to your benefit, to enter and exit trades, to actually look at duration, where to actually place your trades to actually maximize the value of your so-called capital, and also to see whether you actually want to be on the buying side of the trade or the selling side of the trader. Yeah. So these are the things which we will use IV for. Let's see what else we can actually see here. Yeah, the other thing which is also good on the Tastyworks platform is that it also shows you the 5 days IV change. Okay, so this is also another tool for you to actually see whether there is actually an IV expansion or IV contraction in a particular stock. So this is actually the 5-day IV change. Yeah, and if you look at here, so basically you can actually see for those 5-day IV change that, for example, BBBY, yeah, this BBBY, okay. So BBBY for the past 5 days, the IV has actually expanded by 28.5%, meaning that it is actually very rich. That means it is actually very, for just the past 5 days, the IV have actually gone up by 28.5%. So, for example, if you bought into these options before, say last week, for example, if you bought into these options, even if the price did not move, the value of your options will have actually gone up by 20 by certain percentage. Yeah, it would have actually gone up. Yeah, because the IV has actually expanded. Remember earlier when we actually shown you the options pricing, right? It's based on extrinsic and intrinsic and extrinsic value. Yeah, so that part on the extrinsic value, that IV part has actually gone bigger. So when it goes bigger, your option price will also go up. Yeah. So this is an indicator, and of course, you look at the IV rank is 102, right? 102 means that the price for this BBBY can actually go up plus minus $16 in a year's time. Yeah, in a year's time. Oh, no. Sorry, this IV rank plus minus IV, which is here, plus minus IV, which is, no, even worse, 259 IV, yeah, can actually go up even more. Yeah. So that is IV change. Yeah, IV change. And of course, the other indicator which I personally use in this platform is to look for the high IVR to actually trade. Yep. And of course, most of the time, the traders are actually selling premiums. We would just look at the indicator having IV rank of 20 and above to actually sell premium. Yeah. So for example, if you look at those with 1 and below 10, right? Don't bother selling premiums. Yeah, don't bother selling premiums on Apple just now, because it only gives you 5.7 IV rank. Move on to the stocks which gives you higher IV rank. The minimum I look at is at least 20. Yeah. So these are the stocks which I would actually look at to trade premiums. Yeah. From this platform. Yeah, you can actually see the good ones. Yeah, JD 22 is okay. Google 23 is okay. Yeah, so these are the ones which you can actually do on premium selling. Yeah, and of course the other things here, you can actually look at the watch list. You can set your own watch list. You can have what is that? Liquidity, high option volume, high options volume, right? This is one which you can actually see. High IV, I don't tasty IVR. Yeah, so this is IVR, right? So these are the ones which probably show you those with high IVR. See the lowest here is 77 on this list. So sorry, the lowest here is 25 on this list. Yeah, so this tasty IVR, if you want to trade premiums, you can just go to this watch list to actually find which are the stocks which you can actually trade with high premiums. Yeah. Only if you are selling premiums. If you are buying, look for the low IVR, of course, or the low IV. You can even put your IV indicator here, so you can actually just have a quick glance. Okay. So that's what I actually wanted to share with you guys. So going back to some basics, and these are actually important for you traders out there to actually know. If you have been trading so far without knowing these kind of things, I urge you go and study a bit more and understand a bit more on this IV thing, so that you can actually become a much better trader in the future. Yeah. So okay, the other thing is I won't be seeing you guys for 2 weeks. I hope you guys don't miss me. So for those who miss me, please give me a love. So I know that you guys miss me, but I yeah, because I have some engagements coming up for the next 2 weeks, so I won't be able to find time to come on live. But if I can do recorded shows, then I would probably do some pre-record probably during the weekend to actually post it on Tuesday. If not, I will see you guys in after 2 weeks time, and hope that you guys can continue to actually survive the markets without me giving you updates. Yeah, so you're on your own, but of course I'm always here. If you have anything, post it on our Facebook, and I will make sure that I read your questions and answer any of those important questions which you guys may have. Okay, so until I see you again, all the best in your trading. Trade safe, yeah, trade safe, and see you guys next time. Yeah, bye bye.